Story. Joining us is Scott Shellady. He's here in New York today. Lee Munson is with us, Ashley Webster and Liz McDonald. All right, I want to start with Starbucks. Where's that this morning? Because they're forecasting a not-so-merry Christmas. It doesn't matter. They're nearly at $64 per share. But I'm intrigued at that forecast. It's a record high, by the way. But I'm intrigued that their forecast, not such a great Christmas. That fits your theory, doesn't it, that we are winding down this economy?
Absolutely winding the economy down, and the GDP numbers we got this week are testament to that. So going forward, there's going to have to be some sort of innovation, and it's probably not going to be Starbucks, but something that's going to have to come around and really start to boost our average everyday spending.
But I want to get to Lee. We've got a clearly slowing economy, and we've got a rising stock market. Do you want to explain this for me?
Well, you know, all that's happening right now is that profits are starting to go down. We had this great correction in August, and now everybody's putting money into this thing in anticipation of a Santa Claus rally. But just because we've rebounded off those August lows from a technical basis doesn't mean there's not going to be more pain going forward. We've had some good numbers. Earnings season has been great. iPhone selling 48 billion phones. It doesn't matter, because once we get into this Christmas season and we see how disappointing it's going to be a problem for next year. Starbucks is one to watch. When that perfect company says we're concerned about people rewarding themselves with a Starbucks, that is a better bellwether than telling me about how profits are declining.
It's like, Scott and I were discussing what people ask, people like Ashley and I, are we going to have a crash?
Right.
The other question is, why is the stock market close to record highs when the economy is clearly not doing very well? It's the same question, isn't it?
Yeah, but it's just the mom and pop being pushed further out that risk spectrum and looking for some sort of yield because they can't put it in the bank and make any money on it there. So that's what happens. The behavior becomes more and more dangerous, and that's what we're seeing.
The Fed has created a completely artificial environment.
Yeah, I mean,
so it doesn't reflect what's going on in the economy.
So stocks are up because the Federal Reserve is pumping out a ton of money, which lowers interest rates, so you don't get anything on a bank CD or a bond. So you go to the stock market.
It's stunning that the U.S. has grown at less than 3% for the last 10 years, and it coincides right when the Fed really started stepping into the markets.
But, you know, a lot of the money is actually going into those huge technology companies. Yes. That's where the money's going. It's not going to cattle futures. You know, I wish it was.
Stuart, they're not going into small caps. They're not going into small caps. They're not going into places where you need liquidity. So anytime that you see all these dollars going into the big Starbucks, Facebook, Apple can accept $5 billion more in market cap like that. But look at where the small caps have not reached new highs. They're not having a great month, even though they've rebounded.
It's all concentrated in Amazon, Facebook, not Oracle, but Google. Microsoft, Google.
Like,
I'm trying to Netflix.
Like in 1999, right? JDS Uniphase, Cisco, Yahoo. See how this is the same from 15 years ago? A little bit. Let's not get crazy.
Well, not quite the same as the dot-com bubble period. But I remember when JDS Uniphase was worth more than General Motors and Ford combined. And that was back in, I remember that, 1999. Crazy days.
Yes.
Wonderful days in some respects. Go ahead.
I loved it.
But yet what you have to realize, and nobody ever talks about, is the fact that we are technically in an earnings recession. I mean, an earnings recession. I mean, Wall Street doesn't look at things like are good or bad. Wall Street looks at things that are better or worse. And with all the rhetoric of rate rises in this environment, when you're in the middle of an earnings recession, is absolutely perverse, along with stocks rallying on the back of bad news. Yep. Since we had that last swoon, we've only ever had bad news.
All right, to individual stocks which are moving, I bring you LinkedIn. Now, that stock is way up. Well, not that good. 10%. I'm sure LinkedIn will take 10%. What's going on with LinkedIn?
What's going on is the sales grew nearly 40%, even though the profits didn't come in strong.
How much?
It grew 37%. That's a nice top-line performance. This company, is beating Twitter in its user growth. Its second biggest market right now is India, and it's going like gangbusters in China.
10%. They will take
that.
Away. Yeah. Nicole, a couple of solar stocks you have there. Start with Solar City. What's the news on solar stocks?
Well, here's the stock is down 18.5%. I mean, this is atrocious at 31.17. It hits a new 52-week low for Solar City. And here's the thing, that you have the government reducing the tax credit for these solar products. The tax credit will go to 10% from 30%. So they're rushing to do the installations. This is Elon Musk's baby, of course, but a wider than expected loss in the latest quarter.
Cut back on the tax credits and down go the solar stocks. Now that tells a story. How about First Solar? What's the story there?
Well, this is a different one, right? Same industry, but why are they doing well? This one's up 11%. Number one, they sold a stake in a project. Number two, they're expanding abroad in order to soften the whole story here in the U.S. and the tax credit. And number three, they as well as Solar City will actually benefit as they really hone in on greenhouse gases. That is good for a company like these.
Good for all right, Nicole, I'm going to be watching you on Monday morning, 5 o'clock, bright and early, because I know you anchor that very early show. We watch that show, FBN AM. I'll be there. Other big names that we're watching for you: Expedia reporting higher profits. Look at that, an 8% gain. Lots of stocks, names that you know, up and down 8, 9, 10%. How about Baidu? Now that's the Chinese version of Google. That's the way we put it, for example. What am I going wrong, Scott? There's nothing wrong. All right. Stop laughing at me. More ad money flowing into its core research or search engine business, and that thing is up 7%. That's Baidu. How about Valiant? That's a different story. Bill Ackman disclosing he's got a stake in the company, and that's not all he's saying. Liz, what's the rest of it?
Well, he's out on an investor conference call hotly defending Valiant, which has lost 60% of its market capitalization since, August. This comes on the heels of 3 pharmacy benefit managers now cutting ties to that specialty pharmacy company that Valiant does business with. He is essentially saying it's only a PR problem. It's only an investor relation problem at Valiant. And so he's out now defending Valiant. This is going to be a hot stock to watch throughout the day. It is under pressure.
Yes, sir, it is. How about Pfizer and the maker of Botox? That will be Allergan. The deal is in the works, so we hear. This would be, I believe, another big American company driven overseas by high U.S. taxes. Have I got that right,
this
Ash?
is going to get messy again in Washington. Pfizer, one of the biggest and oldest companies, been around for 166 years, could indeed be renouncing its corporate citizenship over taxes. If it takes over Allergan, Allergan is based in Dublin. That's where it's domiciled for its tax. Right. Last year, Pfizer paid 26.5% tax. Allergan paid an effective tax rate of 4.8%.
So if they
it's not hard
move
to see where the benefits are. They could move their
If they now say, we're an Irish company, we're based in Dublin, they pay that tax rate, not this one.
Correct. And this is something that Carl Icahn has jumped all over.
This is why you're going to see Allergan start to pop. We don't know what the value of the deal is. In order for Allergan to be happy, watch this. The foreign shareholders have to own more than 20% of the combined company. That means Pfizer may have to pony up way more to settle this deal to comport with U.S. rules coming down.
But don't forget, Carl Icahn just announced this week that he's forming this super PAC and kicking in $150 million to fight corporate tax inversions just like this.
They're never going to lower, this administration is never going to lower the 35% corporate tax rate.
No, they keep treating the symptom and not the problem. The symptom is, these corporations going overseas. The problem is that taxes are just too high here.
Right.
But the rule says that the foreign company, the foreign investors have to own 1/5 of the stock. That means then they could raise that stake to 40. This is new U.S. rules coming down. That means Pfizer may have to pony up way more than expected to buy this company overseas to comply with the rules.
If they get a huge tax break forever and ever and ever, they'll do it.
Watch that deal get sweetened.
Yeah. All right, moving swiftly along. Look at General Mills, please. They're eliminating more jobs. They're trying to adapt to the way we're moving away from processed foods. I'm not sure General Mills puts out that much processed food. I'm not sure they do. They're a cereal kind of bunch, aren't they?
How processed is your
They're
cereal?
your people.
Really? Yeah, right. How processed is your cereal? Right? I mean, it shouldn't be that processed, no.
Everything they make is processed, I'm told.
Okay, well,
everything.
The problem, the double negative here is that with commodity prices coming down, they should be doing better. And if they're not doing better in a better environment for commodity prices getting cheaper to them, that's a double negative. That's bad.
Not much of a hit, down 3 cents. That's all it is, 58 on General Mills. All right, check that big board, please. We are now almost exactly 10 minutes into the trading session, and we're up 10 points, 1776. 17,766, I should actually say.
It's very patriotic.
Very important. That's an important date.
1776.
For a couple of guys with a British accent and another guy who has a British passport, Scott Shelby. That's an important number, 1776. Now, today it's the end of the month. It's been the best month for stocks in 4 years. Lee Munson, come on, explain it to me again, please. I mean, we were close to 16,000 at the beginning of the month, and now we're closing in on 18,000 30 days later. What gives?
Okay. Again, we have to go back and see what, put it into a little bit of context. First of all, we had that big decline in August. Money is flowing in, like you said, Stuart, names people know, things people are familiar with, and that's what we're looking at. If you go off and look at anything that's smaller that needs more what's called liquidity, remember, liquidity in the stock market is like energy. It's like the sun. We need it. So we're seeing significant cracks in those mid to smaller names that don't have liquidity, and we're seeing all the money rush up. Remember, the dollar's not doing too shabby. You've got money from overseas going into the biggest names. This is a fake movement. I know the market looks great, but right now, if you need to rebalance, I would be taking back your large cap exposure. And the idea that the Fed is going to keep pumping,
look at this, Lee.
Fundamental.
There are two big names this morning, two of the stocks that have pumped up the whole market, and they're more new highs. Will you look, first of all, at Starbucks, as we told you earlier, it had almost at 64 earlier. That's a new high. Amazon is at 626. It had been a little higher than that this morning, but those are the kind of stocks where all the money's flowing in, especially the technology guys. Well, how do you cattle traders feel about all the money flowing into Amazon and stuff?
Oh, we've seen money flow out of the commodity sector for probably 3 or 4 years now. Have you seen all of those commodities across the globe trade at 5-year cycle lows? Which I've told you before is also a harbinger for what things are, what's to come. These types of indexes kind of tell us where things are going, and when we're at 5-year cycle lows, that means this economy is not going to get better anytime soon. So that makes this stock market even more dangerous as it is up at these levels.
See what you did? The Dow was up about, 30, 40 points. And
You just flattened it.
It arrives in New York.
Just because it's going up doesn't mean that we shouldn't be, taking some profits and selling into it.
I think that's a pretty good time to take some profits, actually. Yeah.
I've been doing it all week. I'm happy that the market's still where it's at. I thought we'd be going down by now, but all week, clients need money because my clients are retired. They live off of stuff. Instead of selling it, we sell large cap.
I've been thinking about selling some Microsoft for 15 years.
Never going to happen.
Not yet.
Never going to happen.
It's called hope and it's called hope and change the subject for you on Microsoft.
I live in hope.
Today's your day.
Yeah, that's right.